Fine. So today it's third class, right? Day three.
Exactly.
Okay. So I just ran through a small recap of what we have seen so far. Okay, not more than 10 minutes. Then we'll start today's session also. So we have started the first
Okay.
session where we learned the meaning, the definition of partnership with the minimum of two members and maximum of 50 members. Then the important Act, Indian Partnership Act 1932, and the Section 4 that is defining the partnership business and the relationship what that exists between a partner in a business, the principal and agent relationship, and what is essential is mutual trust and understanding is essential, and how do we call them individually as a partner and collectively as a firm. And most important thing is the act of one partner, that means the action of one partner can bind the entire partnership as a whole. And minor can also be given a chance to become a partner in a business, but after becoming a major, within 6 months he or she must give the consent of carrying over the business further. If not, they have to give the disinterest. Failure to give such response, they will be liable for the firm's debts, everything. The importance of the partnership deed is a partnership deed is essentially required. And if you see in the partnership business, the return agreement between the partners with respect to some important terms and conditions is what we call them as a partnership deed in general, nothing else. And here if you see, the deed can be of two types. That is, it can be oral or it could be written. Okay, partnership deed can be of two types. It can be a oral agreement or it could be a written agreement. If the agreement is in a written document, then we call them as a deed. Okay, so that is how we call them as. So partnership deed is basically an agreement. They are of two types, oral as well as written. If it is in a written form, we call them as a deed. And it is always safe that the business have the partnership deed in the written document rather than having the oral form, because the written document will only be applicable in the court of law if any disputes arises among the partners in the near future, right? Fine. So with this,
Exactly.
we also discussed on the other things like sharing of profits and losses. Obviously, there'll be a profit sharing ratio, which we shortly call them as PSR. This is of three types: equal, agreed, and capital ratio. If it is mentioned in the partnership with it that they are going to share profits and losses equally, then they call them as equal partners. The same if it is mentioned in the partnership deed that the profits and losses among the partners will be shared in the ratio of 3 is to 2 is to 1 or 2 is to 2 is to 1, either way, or 2 is to 3 is to 1, then they are called as agreed ratio. And suppose if it is mentioned like they are partners ABC who are going to share the profits in the ratio of their capital, and given like their capital is as 1 lakh, 2 lakh, and 2 lakh respectively, then the capital ratio will be as 1 is to 2 is to 2. So this is how we will be deciding the ratios in which we have to share the profits and losses of the business. Then interest on partners' capital. This is the most important adjustment, because in the entire chapter of partnership, this is the only adjustment which can be treated either as a charge or as an appropriation. Apart from this, nothing else is having that dual role. Okay, either it can be treated as a charge or appropriation. This is the only item which we can treat either as a charge or as an appropriation. And here, if you have a partnership deed and it says to allow it, then you will allow the interest on partners capital, on the opening capital as well as on the additional capital introduced, whereas it is never allowed on the closing capital. And here if you see, it is considered as an expense to the firm, whereas it is an income to the partner. And the condition which you have to keep in your mind is, it is allowed only when the business has earned a sufficient profit, provided when you are considering this as a appropriation of profit. Okay, when this particular adjustment is treated as an appropriation of profit, whereas if we are considering this as a charge against profit, then you did not bother about the business performance at all. So that's why I mentioned once again over here, charge appropriation. Okay, charge, if it is mentioned, you have to ignore the business result. If it is mentioned as an appropriation, you have to bother about the business result. When it is a charge, it will be taken to P&L account. When it is an appropriation, it will be taken to P&L appropriation account. And followed by this, we have learned the interest on partners drawings. So where the drawings, what you are doing it for your personal consumption, can be of two types, where you can do it on a regular basis, and the date of withdrawal and the amount of withdrawal can be uniform, or it could be, okay, different. If the amount and the date of withdrawal is uniform, then to calculate the interest on drawings, you have got a method called as average period method. Suppose if the amount of drawings and the date of withdrawals are not uniform, they are not same, then you will follow the simple or the product method to calculate your interest on drawings. And remember, this interest on drawings, okay, is always a charge, is always an appropriation of profit. Okay, interest on drawings is always an appropriation of profit. Okay, and this is considered to be as an income to the firm, whereas an expense to the partner. So vice versa. Okay, interest on capital is considered as an expense to the firm, income to partner, whereas interest on drawings is quite opposite to that. It is an income to the firm and expense to the partner. And of course, partners remuneration, there are two types. One is salary and other is commission. And we had a detailed discussion about what is salary. It is amount paid for the work taken up by the partner, and it can be paid on a monthly basis or quarterly basis or half yearly basis or annual basis. And imagine that if you have got three partners, A, B, and C, both A and C are eligible for the amount of salary. For one particular partner A, we have mentioned salary on monthly basis, and for other partner, we have mentioned on quarterly basis. If it is a monthly basis, then the permanent salary should be multiplied by 12. Whereas if it is a quarterly salary, the respective per quarter salary should be multiplied by 4. As a year has got 4 quarters, 3 months put together is 1 quarter. Half yearly means the salary amount should be multiplied by 2, and annual means it should be not multiplied. Then partners commission, we have got two methods, and there are two way of providing commission. One, the commission can be paid on the net sales, that is turnover, we otherwise call them as. Okay, so that sales or the net sales, how you can tell it, there are three different cases I given it. For example, in first case, you have got sales and sales returns alone. So from the amount of sales, if you subtract the sales returns, you will be getting the value of your net sales. On the other hand, case 2, I mentioned that there is net sale of rupees 1 lakh, and there is a sales returns and also sales. If this is a case that is prevailing, then you need not bother about the value of sales and sales returns. Ignore it. Just take the amount of net sales alone for computation of the commission payable to the partner. On the third case, I have given only the sale amount. Neither I have given as net sale nor I have given as sales returns. So in this case, whatever that is given as a sale amount, you will take it as such for the computation of commission. And remember, the other name for sales returns is returns inward. Okay, so sales returns is also known as returns inward. Okay, the second way of providing the commission is on net profits. Here you got two different methods. On net profit before charging such commission, and on net profit after charging such commission. Both are of different formulas. For first one, net profit before charging such commission, you'll use this particular formula, net profit into the rate divided by 100. When it comes to the second category, that is net profit after charging such commission, in this again it has been bifurcated into two different segments: commission on the net profit after charging such commission. The word is just simply mentioned as after charging such commission, whereas the second criteria is commission on net profit after charging all such commission. The word all makes a difference. இங்க இருக்கிற இந்த செக்மெண்ட்டுக்கும் இங்க இருக்கிற இந்த செக்மெண்ட்டுக்கும் ஒரு ஸ்லைட் வேரியேஷன் தான். இங்க ஆல்ங்கிற வேர்ட் இல்ல, இங்க ஆல்ங்கிற வேர்ட் இருக்கு. That makes a difference. But the formula for both the methods is the same. For both the methods, the formula remains same, but the value of net profit will differ from one case to another. In the first one, it is net profit into the rate divided by 100 plus rate. In the second case, also it is a net profit divided by, sorry, net profit into rate divided by 100 plus rate. But how it varies? Let us take an example. Example: there is a information given the question that rate of commission is 10 percentage, and then the net profit is given as rupees 1,10,000. There are three partners having the capitals of rupees 5 lakhs, sorry, 50,000, 50,000, 50,000, 50,000. This is the interest on capital what they got. So all put together comes to 1 lakh 50. As I already mentioned, that interest on capital is considered as an expense to the firm. Okay, it's an expense. One information about the expense is given over here. Right. So in the first case, it is given as commission is calculated on the net profit after charging such commission. So you are just taking the given net profit as such in the place of net profit into in the place of rate. You're using this 10 percentage rate what is given up. So 10 by 100 plus rate, 100 plus 10, 110. So when you substitute it with the values, you are getting the value as rupees 10,000 as the amount of commission. This is in the first scenario. Any doubt the first scenario?
Okay.
Okay. Coming to the second case, we have used one additional word here as all. Commission on net profit after charging all such commission and other expenses. Even in some case, it could be in such a way like, okay, instead of this word and other expenses, they can give it as commission on net profit after charging all such commission. Like this, it could have been given up. But the treatment is same only. I'll say what you have to do. Imagine that you have got, okay, the information what is given that as such. That means there is a net profit of rupees 2,22,000 in this case. You have interest on capital amounting to rupees 33,000, and there is three partners here like A, B, and C. And here both the partner A as well as partner C are eligible for commission, but the value of A's commission is given as such directly in the question as 11,000, but the partner C alone is eligible for 10 percentage commission on net profits after charging all such commission and expenses. It is given in such a way. So what you have to do is, from the amount of the given net profit, first you have to deduct the value of commission which is payable to partner A. So that is 11,000. So from 2 lakh 20,000, if I subtract 11,000, I'll get 2 lakh 11,000. And from this, I have to subtract even my expenses, because it is mentioned as after, okay, there is percentage of commission on net profit after charging all such commission. Here there is one commission which has already been charged, so that is I got the value of 11,000 and the expenses. So here the only expenses is interest on capital 33,000. So I am subtracting that. I am getting the value as rupees 1,78,000, which is my net profit as of now. Now in this 1,78,000, I have to apply it in the formula. So 1,78,000 into 10 divided by 100 plus 10. So that gives me 1,78,000 into 10 by 110. Any doubt up to this?
Okay.
Okay. So when I do this calculation, I'll be getting a value of rupees 16,181.81. Since after the decimal I have got a value which is greater than 5, I am just rounding up the value, so that gives me 16,182. So this is the amount of commission which I'll be receiving it for this particular case. Now suppose you ask me, so what would be the case suppose there is no expenses, because you have said okay on top like otherwise. Here you have mentioned first like commission on the net profit after charging all such commission and expenses. Okay, for this you have given an example here. You have got one more expenses that you have subtracted. What would be if this is a case? Commission on the net profit after charging all such commission. Quite simple. For this, your net profit minus the commission alone, you have to do it. So that means net profit value given for us in the question is 2,22,000 rupees. So from rupees 2,22,000, subtract the value of the commission which is payable to one partner, that is rupees 11,000. This will end up in the value of rupees 2,11,000. So now you have to calculate on this 2,11,000 as per the formula. So 2,11,000 into 10 divided by 110. So cancel the common zeros. Now you have to calculate it like 2,11,000 divided by 11. You may get exactly the whole value.
19,181. Sorry.
Tell me your value.
19,000.
Yeah.
19,182.
Okay. So exactly this 19,182, because the value after decimal is 8.8, so that you can round it up. So 19,182.
That's all.
Yes. Okay. So this is how it will get vary. So when they said here it is after all such means, then whatever the expenses, whatever the charges that you have it, everything you have to subtract it from the given net profit. With the residual value you will go for the calculation. Okay, fine. The next one we discussed on the admission perspective of a new partner. It is not possible unless otherwise all the other partner give the consent for the new partner's admission. If any one partner stands against this, obviously they have to drop the plan of bringing the person into the business. And then we discuss some items, whether it's a charge on the profits or an appropriation of profit with some condition also. So according to that, the first charge we have discussed. So any item which you are considering as a charge will be taken to profit and loss account and nowhere else. It will appear in P&L account. And second, this is something a charge. If you are discussing or you are declaring an item as a charge, means you can okay allow even when there is a loss. Need not bother about the business performance. Some of the examples which we discussed are interest on partners loan. This are divided into two categories: loan to partner and loan by partner. Loan is nothing but, in the first case, loan to partners, loan was given to the partner by the firm. So in that case, for the firm it is an income. I'm talking about the interest. Okay, for the firm this interest is going to be an income, and for the partner the amount what they pay as interest is an expense. And this value whatever you are deriving it as an interest on the loan, you will be taking to your P&L account and nowhere else. So profit and loss account credit side being an income. On the other hand, it is the loan by partner, which means loan was given by the partner to the firm. So if this is a case, it's a reversal of the previous one. For the firm it is an expense, and for the partner it's an income. And here it will also be taken up to the profit and loss account and nowhere else. And in this case it will appear on the debit side because for the firm it's an expense. And then the manager's salary, which is nothing but it is a charge against the profit, and it will be taken to the P&L account debit side. The rent paid or payable concept also we discussed. Okay, that is, it will be considered as a charge, and it will be shown in the P&L account debit side. And followed by that, appropriations. The items which are going to discuss now are appropriations, but for that the conditions are it will be taken up to the P&L appropriation account, either debit side or credit side, depending on the nature of the items. Next, it can be allowed only when the business has a sufficient profit. Okay, any item if you are going to consider as an appropriation, then for those appropriation items, the amount of profits earned by the firm has to be sufficient. That is one of the most important checklist. And then comes the examples what all comes under this category: partners remuneration, whether salary or commission. Okay, so profit and loss appropriation account debit side. Interest on drawings, that means it is a appropriation item, and it will go to the credit side of the partners P&L appropriation. Sorry, it will go to the appropriation account credit side. Okay, being as an income. Next is transferring to the general reserve. So general reserve transfer is out of the profit, so it will go to profit and loss appropriation account, being a appropriation of profits, and it will go to the debit side. This is an only item which will not get distributed, okay, to any partner. That is, transferring the amount to general reserve will not get distributed to any of the partner. It will be kept as a whole. When any emergency comes or liability arises, it is used. And then share of profits or share of loss according to
The
the
general reserve is also known as retained earnings, sir.
come again.
General reserve is also known as retained earnings, sir.
It can be said like not retained earnings. Retained earnings are undistributed profits. Okay, here from the
Okay.
earned profits you are segregating an amount, okay, to meet any unexpected, okay, losses. Anytime it may happen. Okay, that's why you are called this as a reserve. We can't declare this as a retained earnings. Retained earnings are those which you are not allocated as a general reserve, but you are still kept as a profit itself in your balance sheet. Okay,
Understood,
it appears as a profit and loss itself in your balance sheet. Okay, whereas this will appear as a general reserve in your balance sheet. Okay, so in that way we cannot say it is a retained earnings. Got it?
yes, sir.
Yeah. Okay. And then we also discuss on item that can be considered as a charge and appropriations interest on partners capital. And today, just to make a detailed elaboration on the rent paid and payable, I just made it clear here. Rent paid is an expense to the firm, and it is a charge against a profit, and it will appear on the debit side of your P&L account. Whereas payable, if it is a rent payable, even that is considered as a charge against profit, and it will be shown in the P&L account only, no doubt about it, on the debit side. But how both you can show as a, okay, item on P&L account is one is a expense, the other is a liability, which means you are about to make a payment in the current year itself. So in that way, this item of any payable, okay, which is a liability, will also appear in the profit and loss account debit side. Clear? And then
Yes, sir.
here, as I said, when you're going to calculate interest, make sure that in the entire topic of partnership basic fundamental, you don't have interest beyond these three items. You have to calculate interest on the partner's capital. You may be asked to calculate the interest on the drawings done by the partner, and the third one is interest to be calculated on the loan, partner's loan. When it comes to the three items, the most important thing to be kept in mind or checklist is the date of withdrawal, the date of capital introduced, that means additional capital if any, and the date of loan offered, which I mentioned as a information. So when you're going to calculate
Understood.
interest on a partner's loan, always keep in mind the date of additional capital when it was introduced. Because when you're going to calculate the interest, the date plays a major role. From which date to which date, that is from the date of introduction till the account closure date. So that denotes whether you have to calculate for entire full year or for 6 months or 9 months or 5 months according to the cases. Second, interest on drawings. Here you always keep in mind it is an appropriation of profit. Okay. And the next one, interest on partner's loan, it is always a charge against profit. So again you see here, among these three, one particular category, interest on drawings, as considered as an appropriation of profit only always. Whereas interest on partner's loan, always it is considered to be as a charge against profit. The first item alone, or the only item which has a combination of these two characteristics, is interest on partner's capital, charge or appropriation. And again, most important checklist, are given some basic checklist here. Whenever you're going to calculate any interest with respect to any of these three, keep in your mind that the date is very important to calculate interest. Why? Because you apply the percentage on the respective values, and even percentage is very important, which you have to give second priority. For example, interest on capital I given as 5%, whereas drawings I given as 8%. And then I also given like the amount of loan, if no percentage is given, 6% per annum. So if some question, they may have like this different percentages. Whereas in some question, the percentage might have been given equal in all the three cases. So you have to be very cautious with respect to the percentage what is given in the question. So percentage mentioned in the question to be taken utmost care. And then based on this percentage and date, only we may able to decide which method to be adopted to calculate the interest, or whether this item is to be an appropriation or charge. Okay, so in this way, you have to make a checklist before you go for the calculation of interest on the loan, or interest on the drawings, or interest on the capital. Okay, so these are some of the important things which you have to keep in your mind. Any doubt so far in the 3 days, I mean, 2.5 days concept?
No, sir.
Right. So now
So
let
can you
us.
show this today's notes, sir?
Yes, yes, correct. Just a minute. Is it clear?
Yes, sir.
Probably I'll remove the grid lines.
Sir, can you move a bit right, Chichu?
Yes, Kanna. Okay.
The basic settings.
Okay.
Competition.
Yeah. Okay. So now let's go for some practical problems. Okay, and we'll make sure that we understood those problems also, right? So
Oh, okay, sir.
I'm just going to go a bit down. Yes. So we have discussed about the importance of the deed, and we have also come to a conclusion. Or before we go ahead, I'll give you a checklist even here also. Deed based problem, take this as a checklist. Okay. Checklist for deed based problems. So in this, these are items which are going to discuss under partnership deed based problem. One, share of profits and losses. So I'm just going to divide it as this is a particular segment. Deed available, not available, or silent. So under this category, when deed is not available or if it is a silent, in this case only we will be using the provision. Okay, we will use the provision of Indian Partnership Act 1932. So when the deed is not available or deed is available but it is silent with respect to some of these items, what we are going to mention, in that scenario, we will go as per the provisions of the Indian Partnership Act of 1932. Okay. Any doubt in this one?
No, sir.
Okay. So now let's see what is share of profits and losses. Deed available means according to the deed. Okay. According to the deed. That means it can be either equally or it could be in any agreed ratio or it could be in your capital ratio. Whereas if deed is not available or if it's silent, okay, always equally. This is with respect to the first item. Now coming up to the second one, interest on partners capital. Deed available means allow interest on capital as per the rate mentioned in the deed, but ensure firm has sufficient profits. Okay, firm has sufficient profits, and how to treat IOC, whether as a charge or appropriation. As a charge or appropriation. Okay, this is the one which you have to keep in your mind when deed is available. When deed is not available, okay, don't allow interest on capital. Now comes the third segment, that is interest on drawings. So if deed is available under the category deed available, okay, charge charge in the sense that is collect, okay, interest on drawings as per the rate mentioned in the deed. Whereas when deed is not available or silent with respect to interest on drawings, don't charge interest on drawings. Clear this one? Third one?
Yes, sir.
Okay. The next one, partners remuneration. Okay, partners remuneration, which could be either salary or commission. So, if any salary or commission which has been allocated to the partner and mentioned in the deed, then in that case, allow salary or commission to the respective partners as per the deed. So, if it is mentioned as monthly salary, then accordingly you have to do the needful. If it is mentioned as quarterly salary, then calculate the salary accordingly and give the needful. Or annual salary, don't do anything, just allow the amount allowed. Commission, make it in your mind what you have to do, whether if it is a commission on sales or whether it's commission on profit. Then also you have to be very careful whether it's a commission after all such expenses or whether it is commission after such expenses, and whether it's commission before such expenses. So the wordings you have to be very careful before you go for the calculation, right? And then comes up
Yes, sir.
your second one, that is if deed is not available. Okay, in this case, don't allow any remuneration. Okay, don't allow any remuneration. So only if
Sir,
deed
but
is.
without remuneration, we can't run the company, sir.
Pardon?
Without remuneration, we can't run the company, sir.
No, no. See, when deed is saying to allow, you will allow remuneration. Okay. But when deed is not mentioning anything about the remuneration, then you won't allow. Don't allow any remuneration. Okay. That is a logic.
Okay, sir.
Here, condition is very important. Profits are must. Okay. Profits are compulsory. Okay. Why, if you ask, means only when there is a profit you can go for this distribution. If not, you can't give any distribution. For example, there is a partnership deed. In partnership deed, it is mentioned this partner, for example, there are three partners A, B, C. A should get salary and C should get commission, and all those informations are very clear. But fortunately, unfortunately, the business has not got profits. They have suffered loss during the year. In that case, though you have partnership deed with you, mentioning all the eligibilities, but you can't allow the salary or commission when you have got a loss. So all this are possible only when you have profits. Clear?
Yes, sir.
Yeah. The next one which we are going to see is the fifth item is interest on partners loan. Okay, interest on partners loan. So here you have to be very careful. Okay, what is that loan? Whether it is because interest will be calculated always on loan, as I already said you. இன்ட்ரெஸ்ட்டுக்கும் லோனுக்கும் ஒரு கனெக்டிவிட்டி இருக்கு. லோன்ல தான் இன்ட்ரெஸ்ட் கால்குலேஷன் இருக்கு. ஆனால் எந்த லோன்ல, that is very important. Interest on partners loan. That means partner gave loan or partner borrowed loan. That is to be checked. Okay, so here if you see, I am dividing this concept into two. Okay, loan by partner to firm. If this is the case, then in the deed, okay, you will be calculating the interest and you will allow it. Okay, that means you will charge. It's a charge against profit. So it will go to the P&L account. Everything is fine. Okay, loan by partner to the firm means according to the deed. When deed is there, okay, according to the rate mentioned in partnership deed. Okay, according to the rate mentioned in partnership deed, okay, you will be calculating the interest on partners loan. Okay, and will appear, okay, and will, okay, and will appear in P&L account. Which side? Profit and loss account, debit side. Okay, because it is an expense to the firm. Suppose deed is not available, deed is silent. Okay, in this case, interest will be allowed at the rate of 6 percentage per annum. Got it? Got it?
Yes, sir.
Okay. Coming to the second category of the segment. Okay. Loan by firm to partner. For this also, okay, same as above but slight variation. According to the rate mentioned in partnership deed, okay, mentioned in partnership deed and will appear in profit and loss account credit side, because it's an income for the firm. You got it? It's an income to the firm. That's the reason I'll take it to
Yes,
P&L
sir.
account credit side. Whereas if it's silent or nothing, then okay, no interest will be calculated. No interest will be calculated. Okay, so that means when deed is not that, that 6% application, 6% per annum application is only on the loan provided by partner to the firm, whereas that particular condition will not be applicable by on the loan given by firm to partner. In that case, it is not applicable. Clear?
Yes, sir.
Okay. In the same way, similarly, suppose if the firm has borrowed the amount from the outsider, okay, instead of partner, okay, it is some outsider like partner's wife or bank or any money lender. In that case, you can't have any percentage that is quoted in the deed, because they will have the agreement, they will prepare the agreement, okay, that you have to sign it. For example, you are getting a bank loan, you can't dictate the bank to apply or to charge 10% interest. The bank will apply the interest based on the guidelines given by their boss, as the RBA, okay, or what is their norms which has been, okay, provided to that particular segment. So that means this partnership deed or the provisions of partnership deed will be applicable only within the partners. Anything which is to the, with respect to third party, that is partner's wife or the bank or the third party like creditors, this particular concept will not be eligible, it won't work out. Clear?
Okay, sir.
Yeah. The next one, okay, that is the sixth one is admission of a partner. Okay. For this, you need not go with the deed availability or not, because this is no one, nothing to be done with the deed. It is something with respect to the acceptance of the partner. Okay. So that is a special one. Okay. So that we saying as admission of a partner. Admission of partner. Possible only if all partner agrees for the admission, or else it is not possible. Clear?
Yes, sir.
Next most important one, this is a item which is not with respect to the deed but the concept which is associated in partnership business. Okay, that is treatment of,
Sir, for the admission of partners, deed not available means what should you do, sir?
no, this is even this item is not with respect to partnership deed, as I mentioned. Okay, this
Oh,
particular
okay.
segment is also not with respect to the deed availability. Okay, so from here I'm giving some special cases. Okay, so from the sixth point, okay, I'll probably make this as one. Instead of making a sixth, I'll make this as point number one. Okay, admission of a partner, it is no way having any connectivity with the partnership deed. Okay, only if the acceptance is given by all partners is possible. And moreover, this is not going to create any financial impact unless and otherwise he gets admitted as a partner. Got it?
Yes, sir.
Okay. The next is treatment. Okay, I'm going to give the treatment of. Okay. So treatment of uh, amount. Okay, treatment of amount taken by partner from the firm and earned private profit. I'm mentioning here it's a concept. Okay, as second one, treatment of amount taken by partner from the firm and earned private profit. Okay, this will take as one A. Okay, not here. Earned the private profit and B. Okay, suffered a loss. Okay, under two segment we'll see the concept. For this, I'm going to give an example. Example: A, B, and C are partners in a firm, sharing profits equally. Okay, sharing profits and losses equally. It was found that partner A have taken rupees 1,50,000 from the firm and earned a private profit. Okay, they can use the word private profit or they may give the word profit. Okay, if one particular partner alone is getting profit by taking the firm's money, it is always considered as a private profit. Okay, he has taken rupees 1,00,000 from the firm and earned a private profit of rupees 25,000. Okay, now how do you treat this? Now what is the problem is partner B and C. Okay, this is a concept. Have you got the concept? There are three partners. They are sharing profits and losses equally, and they have found that partner A has taken 1,50,000 rupees from the firm, and he has earned some private profit. Okay, after
Yes,
coming,
sir.
after getting know about this everything, now partner, okay, the remaining partners, that is B and C. B and C insist partner A to refund. Okay, partner A to refund the amount back to firm. Okay, they are insisting him to refund the amount back to firm. How much? Or my question is, okay, not how much. My question is, will A, will A have to refund the money? But that's my first question. Will A, okay, have to refund the amount back to firm? This was my first question. Followed by that, my second question is as follows here. Okay, if yes, then how much should he refund? This is my second question. Can you able to answer the question?
Yes, sir.
Now, how will you answer for this? Will A have to refund the amount back to the firm? Yes or no?
Yes, sir.
Yes. So for this, the answer is yes. Okay. Sorry. Just a minute. Something gone wrong. Just a minute. Now.
Okay.
Yes. Okay. For the second question, what will be your solution?
So he should pay all the profits, whatever getting until he finishes off his debt, sir.
No, that's what. What is the amount? Tell me the amount then. I given the question completely.
25,000, 25,000.
It is not only 25,000. He has to refund the amount of rupees 1,70,000. That is amount taken. Okay, the amount what he took plus the profit. Okay, what is the amount that he took from the firm?
Sir, he should. So the profit will be minus from the debt, no, sir. Like 1 lakh rupees of the means, two for 25,000
No, no,
rupees
no,
is
no,
paying
no,
back, sir.
no, 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 no. The it is not okay of the firm's one. This is not from the firm. He has taken from the firm, but he has earned the private profit. He has not done something to the firm. Okay, he has took the money from the firm and he has earned the private profit for himself. So in that case, how can you go and subtract and then she give the remaining balance to the firm?
Understood, sir.
Okay, so here the debt
Yes,
amount rupees 1,50,000 what he took. Okay, along with that the amount of rupees 25,000 the profit what he earned. Got it?
yes, sir.
So this is one case. Now my second case is okay because this I said I given two examples. Treating profit. Now we are going to see when he suffered loss. Okay, for loss also let me give the example on the sideways. I'm going to have almost everything the same. Okay, I'm not going to change everything. Okay, let me have just a minute. Wait.
So we control D and drag, sir.
Yeah, yeah, just a minute, just a minute. It got hanged. Okay. Here the question is going to get changed. Okay. The same value, 1,50,000 from the firm and suffered okay. he has suffered a loss of rupees 50,000. Okay. Now the question is as follows: will A have to refund any amount back to the firm? And the second question is, if yes, then how much? Okay, this is a question. A, B, and C are partners in the firm sharing profits and loss equally. It was found that partner A have taken rupees 1,50,000 from the firm and suffered a loss of rupees 50,000. Okay, partner B and C insist partner A to refund the money. Okay, to refund the amount back. So for this, what will be your answer?
Sir,
Yes.
for first question, A have to refund the amount, sir.
Okay, so yes is your answer, right?
Yes, sir.
Okay, okay. So the answer, okay, yes, okay. How much then?
2 lakhs, sir.
No. In this case, he has to refund only an amount of rupees 1,50,000. Okay. The reason is he has got only the loss. Why do you want to take a loss and give it to the firm? That
Yes,
loss
sir.
he will bear it. Okay. He should only refund the money what he took. Okay. So refund only the actual amount.
Understood.
Okay, refund only the actual amount back to the firm in case of loss. Is it clear to you? Is it clear to you, Kana?
Yes, sir.
Okay. So
Yes, yes, sir. Yes, sir.
probably I'll just share from the top. You can just take a note. Okay, so that we'll move on to the problems and we'll complete off. Is it clear?
Okay, sir.
Is it okay?
Yes, sir.
Yeah.
Sir, can you move a little bit down, sir?
Yeah, yeah, yeah.
Can you go a bit down, sir?
Is it fine or still more?
Perfect, sir. Perfect, sir.
Okay.
Can you move a bit right, sir?
Yes. Okay.
Yes, sir. Sir, left side, sir.
Yeah. Okay. Now let us come back to the problem. Yes. First one. In the absence of partnership deed. So when you read the question itself, they are mentioned very clearly in the absence of partnership deed. state the provisions of Partnership Act 1932. So I already said what are the provisions that says in the absence of partnership deed. So that you have to state it very clearly. Relating to salaries of a partner, interest on partner's capital, interest on loan by partner, division of profit, interest on partner's drawings, interest on loan given to partners. So now you have to say me when there is no partnership deed, will you give salaries to partner?
No, sir.
So it won't be allowed. Not allowed. Coming to the second one. Interest on partner's capital.
No, sir.
So even for that, not allowed. Okay. Interest on loan by partner.
Uh, 6%, sir.
Very good. For this 6 percentage per annum. That is very important.
Sir.
Division of profit.
Equal, sir.
Very good. Equally. Interest on partners drawings.
Uh, not available, sir.
Not allowed. Interest on loan given to partner.
Uh, Not allowed, sir.
Here you should not say allowed, it is charged, not charged.
Okay, not such.
Okay, or not collected. Okay, clear the first question.
Yes, sir.
Move on to second one. Mahesh, Ramesh, and Suresh are partners in a firm. They do not have partnership deed. At the end of the first year of the business, they faced the following problems. Number one, Mahesh wants that interest on capital should be allowed to the partners, but Ramesh and Suresh do not agree. Okay, that was the first problem. So, what is the main concept that was highlighted in the problem?
They do not have a partnership deed, sir.
Yeah,
And
partnership is not there. Okay, do not have
in
partnership
that,
deed. In the first
among
problem,
three partners, one partner wants to have interest on capital, sir,
so
but other two partners are not agreed to it.
yes, so here the main point of discussion is interest on capital. Okay, so when deed is not there, what you should do?
Uh, the interest on capital is not there, sir.
Okay, so here,
It's not allowed.
yes, in the previous problem, you didn't have the partner's name and all. It was only given what is the scenario, whether
Hmm.
salary you will allow or not. Here, there is a name given to the partners, and each partner is keeping forward some claims. They are keeping some allegation. We'll say as allegation or claims. So, in that context, we have to make a sentence and say whether that particular partners, okay, allegation or the particular partner's claim will be addressed or not, will be allowed or not, or will be charged or not. According to that, Mahesh, he has made a claim. He wants interest on capital. So that means Mahesh claim for interest on capital will not be allowed or will not be accepted. Like that, you have to say.
Yes, sir.
Okay, you have to complete the sentence. Second one,
Yes, sir.
Ramesh wants that the partners should be allowed to draw salary, but Mahesh and Suresh do not agree. So here the partner who's making the claim is Ramesh. So Ramesh wants a claim that the partner should be given the privilege to draw salary. So here deal is not that. In that case, what is the main topic they are discussing about?
Ramesh won't be able to draw salary, sir.
Yes, so salary remuneration concept. Okay, so that
Hmm.
means Ramesh claim is not accepted. Okay, for salary will not be accepted. Third, Mahesh and Ramesh want that Suresh should pay interest on loan given to him by the firm, but Suresh does not agree. So here you see the allegations kept by claim has been kept by Mahesh and Ramesh
And
against whom? Against Suresh.
Suresh,
Regarding what? Regarding interest on
interest on loan.
loan, okay, given to him. That means loan was given to whom? To Suresh. By whom? By the
Suresh,
firm.
Ramesh and Mahesh and Ramesh.
No, 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 no,
Ah,
no.
okay.
By the firm.
Understood, sir. By the comments, sir.
Okay, so if it is a loan given by Mahesh and Ramesh, obviously they can claim, but not at any rate at the rate of 6% per annum.
6% per annum.
But here it is the firm given the loan to Suresh, for which these two are keeping allegation in the front that he has to pay interest. So what will happen in this case?
Mahesh and Ramesh claim won't be available, sir. Not be
Okay, it's not
vouchable, sir.
accepted. Suresh will not pay any interest on the
Interest, sir.
loan in the absence of an agreement. Okay, now comes the last fourth. Mahesh and Ramesh having contributed a larger amount of capital. So these two, Mahesh and Ramesh, has given larger amount of capital contribution, and they desire profits should be distributed as share of profits in the ratio of their capital. But Suresh does not agree. So what is here the concept is on profit share of profits. So what will happen?
Yes, sir.
Will it be distributed in the
Sir,
capital ratio?
no, sir. It should be distributed equally.
Yes, so that is what you're given here towards the last. Profit or loss would be distributed among the partners equally. So the claim made
Therefore,
by
Mahesh and Ramesh
okay is
can't pay.
not accepted. Clear with the second question?
Yes, sir.
Okay. Moving on to the third one. Following are the differences that is arise among the partner P, Q, and R. State who is correct in each case. So now we have to give a statement like who is correct. Okay. And with that we have to give our explanation. First one,
Yes, sir.
P. There are three partners. So first P, partner P have used rupees 50,000 belonging to the firm. Okay. And earned the profit of rupees 5,000. Q and R wants the amount to be given to the firm. Okay. Now you tell me whether Q and R are correct in their statement. If so, how much is the amount?
Yes, sir. Q and R are current assessment. The P should pay back 55,000.
Exactly. The second case, Q have used rupees 10,000 belonging to the firm and they have incurred a loss of rupees 1,000. He wants the firm to bear the loss. Okay, now Q is used amount and he faced a loss of 1,000. He wants the firm to bear the loss.
Sir, firm can't bear the loss, sir.
So
And
Q is
Q should
Q.
pay back 10,000.
Very good. So Q has to pay back an amount of rupees 10,000 back to the firm, and okay, his want, that means his claim can't be accepted. His claim can't be accepted because they have used the word wants. Okay, he wants, they have mentioned also, that means you can use the word claims. Come to the third one. P and Q want to purchase goods from Star Limited. So two partner P and Q, they want to purchase the goods from Star Limited. Whereas R is not accepting this proposal. So here there is not mentioned anything about with respect to money. Okay, monetary values are not been mentioned. It is only a decision making process whether we can change our supplier. So far they were purchasing from someone else, but going forward they want to buy from Star Limited. Of course, in this decision making process, if majority of the partners are accepting, even one person is not accepting for it, we can take a call based on this. So that means they may purchase from Star Limited. It is not they should, they may purchase from Star Limited. It is not
Yes,
since
sir.
R is putting a stop, he is not agreeing for it, they can't go for the okay proposal. They can go ahead. Okay. Whereas in
Understood, sir.
admission of a partner alone, why we are taking such a call? Because once if you are going to admit him as a partner, from then onwards you will have some financial impact. But here it's a decision
Sir.
making. We can go with them. Okay, that since the money value is not given, then it can't be done. Suppose if the question says the other way, P and Q wants to purchase the goods from Star Limited. However, R does not agree for the proposal since Star Limited, okay, is been run by the blood relative of partner Q.
Sir, can you repeat, sir?
P and Q wants to purchase goods from Star Limited, but however, R does not agree for the proposal since Star Limited is being run by a blood relative of or a distant relative of Q.
Then it's not allowed, sir.
Exactly. Because that leads to earning some private profit.
Yes, sir.
It goes to same business, I mean same family. So that should be avoided. That's the reason. The next one, D.
Yes, sir.
Q and R wants to admit W as partner. P does not agree.
They can't allow it, sir.
Exactly. The next E. R had given a loan of rupees 2 lakh to the firm and demands interest at the rate of 10 percentage per annum. P and Q do not want to pay the interest.
So that means the firm should pay 6%. The R should pay 6% per annum, sir.
Yes, yes. Okay, so he is asking for 10 percentage, but still he can get only 6 percentage amount. In this type of problem, you also go one step ahead and do the calculation also. Calculate what is 6 percentage of that amount of rupees 2 lakh. That amount you also mentioned very clearly. So that will not,
Okay, sir.
okay, that will not make you to lose your mark unnecessarily, even though the teacher says, I have not asked this, but we can't say how the board evaluator is expecting it. Okay, so for
Yes,
to
sir.
be in a safer side, you declare the result along with the value. Okay, that's always safe.
Yes, sir.
Move on to fourth question. Okay, check it out what is special in the fourth question. Barun, Tarun, and Shivam are partners in a firm and do not have the partnership deed. Barun introduced a further capital of rupees 5 lakh on 1st of October 2022, whereas Shivam took loan of rupees 50,000 from the firm on 1st October 22. Dispute have arisen among them on the following. So here one partner has introduced additional capital rupees 5 lakh on 1st October 22 and the other partner, okay, have taken loan, took loan from the firm. So from the firm he has taken loan. Okay. On what date? On the same date of 1st October 22. First dispute. Barun demands interest at the rate of 10 percentage per annum on rupees 5 lakh being extra capital. So that means interest on capital. Okay. He is demanding interest at
Yes,
the rate
sir.
of 10% per annum on the extra capital. Now you see whether do they have partnership deed.
Sir, without partnership deed, we can't allow interest on capital,
That's
sir.
it. So in the absence of partnership deed, provisions of Indian Partnership Act 1932 will apply accordingly. First case, okay, the interest on capital will not be allowed. Second,
Yes,
Tarun
sir.
desire that his son Deep should be admitted as partner and he will give him half of his share, but Barun and Shivam do not agree.
Sir, Tarun's son can't become admitted as a partner, sir.
Exactly. Okay, because of the what the against the
Other two
other
partners are
parties
not
against him.
accepting that.
Yes. Third one, Barun and Tarun are of the view that Shivam should be charged interest. Why? Because Shivam has taken loan from the firm. Okay, so the two partners Barun and Tarun are with the view that Shivam should be charged the interest on the loan which he had taken from the firm at a lending rate which is prevailing in the bank at 12% per annum. So this is
Sir, but
what
this can't be allowed, sir. Interest on loan
charged.
can't be allowed, sir.
It is not allowed. Charged. You are
Ah,
collecting.
sorry, sorry. Interest on can't be charged, sir.
Okay, it can't be charged. Okay, fine. The next one, if you see, Tarun, Tarun has withdrawn rupees 50,000 from the firm. Okay, so withdrawn rupees 50,000 from the firm for his personal use. So what is this referring to? This refers to
The drawings.
very good. Okay, this is referring to your drawings. So they are talking about drawings. Okay, Barun and Shivam of the view that okay, Tarun should be charged interest. So interest on drawings at the rate of 10% per annum. But will it be calculated?
No, sir.
That's it.
Interest on drawings can't be charged. That can't be charged without
Yes,
a partnership.
exactly. Okay. Now there is one problem fifth problem. I want you
Yes,
to
sir.
make an attempt on this as a homework. Okay.
Okay,
Along
sir.
with that, you can just complete the remaining four. Remaining four, we discussed it completely, and you also answered it.
Yes, sir.
Okay, here you got the claims of two partners, one after the other. Here they're given the major statement. Who are the partners in the firm? Harshad and Diman are partners in a partnership firm since 1st April 2022. No partnership agreement was made. They contributed rupees 4 lakh and rupees 1 lakh respectively as capital. In addition, Harshad had given loan of rupees 1 lakh to the firm. So here they are talking that one partner, Harshad, gave loan rupees 1 lakh to
Okay,
the
sir.
firm on 1st October 22. Due to long illness, Harshad could not participate in business actively. Okay, from 1st August 22 to 30th of September 22. Profit for the year ended. So for the year there is a profit. Okay, amounting to rupees 1 lakh 80. Dispute arisen between these partners. What is the claim? Let us see. Arshad claim he should be given interest. He, in the sense, it is talking about Harshad. Harshad claims
Sir.
that he should be given interest at the rate of 10 percentage per annum on capital and loans. That means
He
Harshad
can't
has
be given, sir.
no, don't be in a hurry. Harshad have given both. He has given loan as well as capital. Correct. Look at that
Yes, sir.
sentence. Okay. It was mentioned very clearly they both have started the business and since 1st of April 22, no agreement was being made. Okay. They had contributed. So contribution is capital contribution. Contributed 4 lakh and 1 lakh respectively. So the first 4 lakh talks about Arshad. So Arshad is claiming okay 10 percentage interest on the amount of capital what he contributed as well as on the loan amount what he has provided. It was given right. Harshad had given loan of rupees 1 lakh to the firm on 1st October. So two things you have. He is claiming 10 percentage on both on capital as well as on loan. Now tell me which one you won't provide it.
Interest on loan, sir. Yes, sir.
Interest on loan.
Sir, interest on loan we can't give, sir. Interest on capital,
Don't get
uh,
don't get confused. Don't be in hurry. Be calm. Be calm. Tell me.
sir. As per the because they don't have a partnership deed, they can't give interest on capital, sir.
Very good. So capital interest not allowed. Whereas loan
Yes, sir.
interest you'll allow at the rate
But
of
6%, sir.
six
6%.
percentage per annum. So what you
Yes,
should
sir.
do is you have to do a calculation also. What is the calculation? What is the loan amount that he has given up? 1 lakh rupees. Okay. Into what is the percentage? 6 percentage. Okay. When he gave the loan given in the question, the loan was given on.
Uh, 1st October, sir.
So starting from October till 31st of March, how many months?
5, sir.
Calculated properly starting from October because it is 1st of October. It is 1st of October.
6, 6, 6, 6.
6 months.
I left October, sir.
Yes. Now cancel the common two zeros from here, two zeros from here, and six table, six twos are two table, three times. 1,000
Okay.
into three will give you 3,000
3,000.
rupees. Now do you understand today why I said when you do the calculation of interest calculation, remember the percentage, what is given, what we have to take up, and then what is the date of the amount of loan offered, and then go for the calculations. So here if you fail to take 6 months, you take 25 months, obviously you'll get the wrong value. Clear?
Yes, sir.
Yes. The second one, profit should be distributed in the ratio of capital. He says that it should be distributed in the ratio of capital. But how it should be distributed?
Equally, sir.
Equally. Okay, right. Then comes the claim of demand. What was his claim? Profit should be distributed equally. So demand says he should be distributed equally. Yes, his claim is right. Profit should be distributed equally. So his claim is correct. Second,
Yes, sir.
he should be allowed rupees 2000 per month as a remuneration for the period he managed the business in the absence of Harshit. So here it was
It is not
mentioned
allowed, sir.
it can't be allowed. Okay. So that means his claim will be rejected. This is not possible.
Yes, sir.
Okay. Remuneration is not possible. Interest on capital and loan should be allowed at 6% per annum. He is
Sir,
saying
only
that
interest on loan can be given 6%.
exactly. So this is correct. This is wrong. Okay. So what they said finally, you are required to settle the dispute between Arshad and Diman. If suppose the
Yes, sir.
question stops up to this alone, okay, up to this segment alone, they don't have the second part. Also prepare profit and loss appropriation. If it is stopping to this segment, then just you give the declaration alone, whether it is possible or not possible, with the justification. But since
Yes,
they
sir.
said you should also show, okay, prepare the profit and loss appropriation account, then one small calculation you have to do it. What if you ask, what was the total amount of profit they have shown over here?
1,80,000, sir.
1 lakh 80. So out of the rupees 1 lakh 80, okay, if you take away this interest, 3000 rupees interest, right? This interest is
Yes,
on
sir.
loan, okay, that you have to provide it. So now only you're providing it, so subtract that amount of 3000. Okay, what will be the remaining balance?
1,77,000, sir.
1 lakh 77,000. Now this is the amount you should divide it among those two partners,
Equally.
okay, equally. So when you divide this value 1 lakh 77,000, how much you will be getting for each partner? 88,500.
88,500, sir.
Yes.
Yes, sir.
So each partner will get an amount of rupees 88,500 and rupees 88,500. Got it?
Yes, sir.
I hope you know the format of your P&L appropriation account. If not, just time being,
Yes.
you go and check out your textbook for the proper profit and loss appropriation format. Using that, you complete this one. Okay. The next
Okay, sir.
segment, interest on loan by partner to firm and by firm to partner, we'll see in the next class, because we already discussed
Yes,
even
sir.
about this in the previous video. So we have to go straight away for the problems. Any doubt in the problems?
Okay, sir. No,
I
sir.
my concept will be like majority of the problems what I'm going to cover up will be from the exercise, and very tricky or some sort of what to say difficulty in the level of doing the problems in illustration alone. I'll take it up for the calculations. Okay,
Okay, sir.
because in schools it will be in reversal way. They go with the illustration and they give the homework as exercise problem, and they will give a just cross reference, refer which particular question for this particular problem. But I won't go in that segment. My way of approach will be entirely different. I'll touch on the exercise
Yes, sir.
problem and illustration problem, whichever is required, whichever is asked in the board exam, and whichever has some tricky calculation in understanding. Those problems we'll discuss upon. Clear?
Okay, sir. Okay, sir.
Okay, Kana. Thank you.
Thank you, sir.
Yeah.